Hey there, everybody. So Dylan Estes, your favorite branch manager, mortgage broker here for the Gateway branch in Exim Mortgage. Just wanted to put together this video kind of in depth a little bit on the three things that it takes to get approved for a mortgage. So again, just all my contact information, everything you need to know about me, but let's jump right into it. So the first thing is going to be your credit score. Now, credit is something that ultimately I have a lot of solutions for. We go into a pretty detailed viewpoint of now. Ultimately, for qualifying for a mortgage, we're going to look at your the middle score of the three major bureaus. It's Equifax, Experian, and TransUnion. Whatever your middle score is what we're going to score you at for mortgage purposes. Now, important to note on a conventional loan, if there's two borrowers, we can average the two scores together to get the middle score of the two middle scores. So, for example, if you had somebody that was at a 600, somebody at a 700, we could put that together and get a 650. But if it's just a single application, it would be whatever the middle score is between those three bureaus. This is a breakdown of what you'd be looking at. Now, really and truly, I could go all the way down to a 500 credit score. Anything below 580, though, would require 10% down, and the terms are not going to be that great. But outside of that, your fair is going to be that 580. I would really put that in mortgages, 580 to 620, 640, somewhere in there. Fair, we can get approval there, FHA more than likely. Then it jumps up again for mortgage purposes, 640 to probably about 720. You're going to be looking at that good range. And then excellent, anything over 740 in mortgages is exceptional. Okay. But those are your range of scores, goes all the way down to 300. The highest you could have is 850. Anything over 500, we could do. Anything over 580, we could do with 3.5% down. Conventional typically comes into play closer to about your 680 mark. Okay, 680 plus. And then again, anything over 700 is going to put you in that fantastic category. Now, on this note, a couple things to note. If you have no credit, you're treated as if you have a 580. I can get that loan done. But what's best is if we could take 3 to 6 months and build credit. A lot of times people say, Dylan, how do I build credit? Three things I can tell you to do. One, anybody can open up a secured credit card. What that looks like is go to your bank, give them $500. Say you want to open up a secured credit card. They're going to give you a card with $500 preloaded on it. It's the $500 you gave them. Um, Keep that usage at about 10%, 10 to 30%. Don't jump over that 30% mark. Um, and it's low risk for the bank because it's secured. You've already given them the money. Worst thing that happens is you run your bill all the way up to that $500 limit. You never pay it back. You robbed yourself and you get a bad credit score for it. But if you use it responsibly, you'll see your score come up, and then you'll also qualify for unsecured credit cards in the future. Uh, Another thing that you can do is going to be if you know somebody, a parent, a brother, a sister, somebody that has responsible card usage, you can get added onto their account as an authorized user, reap the benefits of that account having good standing. And then the third and final thing that I can tell you to do is a lot of rent to own places have 6 months, same as cash, same as cash. Now, really, if you hold it for much longer than about 6 months, or they might have a sell a $500 couch for $700, right? But the important thing is you ask them, hey, do you report to credit? And if you pay it off within that 6 month period, you get it quote unquote interest free. One of the few ways to build credit interest free. All right. Other side tips, there are things like Experian Boost or Credit Boost that you could look at doing. Those are free services through those credit providers that basically scrub your bank accounts or bank information, give you credit for reoccurring payments being done on time, and build your score that way. But again, to summarize, credit, we want it at least, really ideally, I'd love to see it over 580, closer to that 620, 640 mark. But we can qualify in other circumstances as well. Job history. So the second piece is going to be your job history. Okay. Now, for W-2 employment, really it's pretty straightforward. Would like to see 12 or 2 years history, same field, same pay type, all that good stuff, and they just really want to see that 2 year history. Now, if you're salary W-2, that is not a hard and fast rule. Um, we would have to come up with the timeline and all that good stuff, but ultimately, W-2 employment's super easy for the most part. Commission gets a little tricky. Commission W-2 can get a little tricky. That's a hard and fast. You got to have 2 years so that we have enough history to see what your commissions work out to be. But we could use base pay. Self-employment, you'll want to get with me. That's a totally different ball game. That we need tax returns and kind of dive in and see what we qualify for and all that good stuff. But general rule of thumb on job history, 2 year history. School does count. So if you were in school, whether it's high school or college, and you've only been at your job for 6 months, 3 months, just started, but you've been in school for the 2, 3, 4 years prior to, we can use that history as well. But generally speaking, want to see a steady, good pay for 2 years, or W-2 employment for 2 years. If you're self-employed, reach out. Let's talk about your specific situation, because self-employed is it's very subjective and depends on case by case. Okay. Last piece, your closing cost down payment. This is where I get to shine as a broker. Okay. So you've heard me tell you the difference between a broker and a banker. Bank, high margins, bunch of staff to pay, higher rates, higher closing costs to compensate for that. If they can charge it and get away with it, they can charge it. As a broker, we're capped. No brokerage can make more than 2.75% on any given deal. That on average is anywhere from 100% lower to, I have priced out against guys that have been up to 1.75% lower, and at that 2.75, and then pricing out against them charging 500-600 points, which is pretty crazy. That equates to lower interest rates for you. It also equates to lower closing costs. Here specifically at the Gateway branch of Nexa Mortgage, we qualify our own loans. We process our own loans. We're part of the biggest mortgage brokerage in the country. So a lot of our lenders will waive their underwriting fees. That puts us in a position to save our clients between no processing and no underwriting. That's going to save you about $2,000 right off the rip. Okay. The only thing that you should have as far as closing costs go would be any points or discount if you want to buy your rate down, or title work, local states taxes, government fees such as probate, recording the new deed, all that good stuff, and then setting up your escrows, which will be a separate video on escrows. Simply put, fancy way to say taxes and insurance, and that portion of your payment that is your taxes and insurance. Now, your down payment, that's going to be the percentage of your loan that you have to bring to qualify for the program. First-time home buyer, conventional would be 3%, FHA would be 3.5%. For a subsequent use on conventional, it would be 5%. And then, of course, on the VA loan, down payment is 0, right? So down payment you have to bring. We do have down payment assistance programs. I'll have another video on that, but what I can tell you before the video is, spoiler alert, only about 30% of the time when I actually take my clients all the way through what the program entails and how it works, do they say, hey, this fits our needs and this looks like a good idea. Most of the time you got to think of it long money versus short money. That short money doesn't pan out. You're going to have a higher rate. You're going to have closing costs. You're not coming out ahead enough in most cases to justify the terms of the down payment assistance programs. There's exceptions for everything. There are some great programs out there that definitely can come into play and benefit the right situation. But for the most part, the more that you bring in your own down payment opens up a lot of doors. As far as closing costs goes, the beautiful thing in March of 2020, or excuse me, April already of 2023, is we are seeing more of a shift to a buyer's market. Your closing costs can be covered in a couple different ways. One, you bring the money yourself, right? That's obviously the least ideal. Two, the sellers give what are called seller concessions to take care of that closing cost. So, for example, let's just say on a $250,000 home, your closing costs work out to be, let's just say $5,000, rough number, right? Well, on that, if we go in and you're negotiating and you go, okay, they want this house been sitting on the market for 25 days. They're asking 220 or 250. we're willing to give them 250, but we want them to give us $5,000 in seller concessions. What that looks like is your loan is based off that 250 amount, but the sellers are crediting you $5,000 worth of your closing cost, and thus taking care of your closing cost for you. Okay, and so those are the three things when we talk that we'll kind of go through in your specific situation: your credit score, why it is where it's at, what the liabilities are. They will impact what your debt to income and how much you qualify for. Your job history, how long you've been where you are, what your 2-year history looks like. Make sure we qualify there. And then your third thing we'll look at is your down payment and closing costs. Keep in mind, this is a general overview. When we speak, we will talk about your specifics and what it looks like and how we can best blue chip tailor a custom plan directly for you, and what your goals are and what's important to you. So without further ado, I appreciate you guys for joining me. That is how you get approved for a mortgage. You have credit over 580, ideally around 640 or better. You got 2 years job history or school or something that we can point to as to why there's a gap in job history, and then have the funds for at least for your down payment at anywhere from 3 to 5%. And then the closing cost would be something that in the right situation we can get taken care of. But all that to say, thank you for watching. I hope you enjoyed this. And if you have any questions, that's my personal cell phone, 314-250-0212. Look forward to speaking with you soon.